I'm Jacob Reeves. I'm a senior tax manager here in our Newport News office, and today we are going to be going over some individual and estate provisions from the One Big Beautiful Bill.
Hi, welcome. My name is Marie Wimmer. I'm a senior tax manager out of the Roanoke office for Brown Edwards. Child and dependent care. The first bullet point here, dependent care assistance program. This is not new. What this is that's an employer-sponsored benefit that allows employees to use pre-tax funds to pay for dependent care. And so OB3 is just increasing that annual exclusion from $5,000 to $7,500. The second bullet point, child and dependent care tax credit, that is also not new. But what we now have is the maximum credit rate is increased to 50% from 35%. And we have a really good chart on the next slide that we'll get into more detail. And then again, the adoption credit is not new, but under OB3, we have now a maximum credit of $17,280 for adoption expenses. Added under OB3 is that $5,000 of that is a refundable credit, not eligible for carryover.
Yeah, I think the big things on those refundable credits is that the IRS is actually going to pay you whether you owe tax or not to get that benefit. So we always prefer a refundable one to a non-refundable one. So that's pretty big there. But yeah, I think this is a broad theme we kind of saw in a lot of the campaigns, and what was coming is the cost of childcare has just gone through the roof, and they're really acknowledging that we need to do more to make it more affordable. And one way to do that is to help so you're not paying the IRS as much, so you can afford to pay your daycare provider and things like that.
So here's the chart on the child and dependent care credit increase. So I said before that the credit percentage increased from 35 to 50%. So now you can see where that 50% credit will show up. Now we can just use an example to walk through this. If you had a married filing joint couple, should say they had one child, they have income of $14,000. So they're on the right-hand side, first row. They could get up, to start the calculation, you would take 50% of their dependent care expenses. So let's just say they had $5,000 of expenses. 50% of that is $2,500. Now I said earlier in the presentation that the cap for this is $2,200 per child. So they would get the maximum, up to the cap of $2,200 credit.
Yeah, so I think that's a huge number when you're at those lower income thresholds to really get as much as you can back from that, because you already don't have that much money available to spend on it. So it's a huge benefit there.
ABLE accounts. These are not new. We've had these. These are Achieving a Better Life Experience account that can be set up for employed individuals with disabilities. Under OB3, you're just now able to contribute more to these accounts, and those contributions will be indexed for inflation going forward. And now contributions into these accounts are eligible for the Savers credit. And that starts after 2026.
Yep, and I think that permanent allowance for rollovers from your qualified tuition programs to these accounts, it gives you some saving flexibility, because you're not always sure what life circumstances are going to be down the road, and things do change. So it is nice that we have that option that we can move that over in those events.
Right, if they don't need the tuition,
Yep.
they can roll it
Yep.
into the ABLE account. It's, again, a nice benefit.